Yo, what's up, ladies and gents? Welcome to the first episode of this Advanced Liquidity series, where I will be going over advanced liquidity concepts by Manda and just giving you my interpretation of it. Okay, so um, we need to understand that the market is not random, that it's a battleground between smart money traders and retail traders. Okay, so the whole idea of this bootcamp will be to show you how liquidity drives price so you can trade with smart money and not against them. Okay, so first start with let's first start with what is liquidity. Okay, so liquidity is just where you can find orders resting, stop losses, TPs, resting orders, right? Those are the liquidity pools. Now, a lot of the times you'll see people approach the chart, they say, okay, this low, we got this low. All of these are sell side liquidity as we come down. Now, our goal with advanced liquidity concepts will be to use certain patterns um, and emotions like fear, greed, FOMO, all of that retail traders experience, and certain patterns to identify high probability areas where most likely stop losses are resting. So those are the areas that we will mark out as true buy side and sell side liquidity pools, not just random highs and lows, but specific highs and lows based on criteria that will be shared later on. So the most important part you need to understand is that smart money is trading against the retail traders. So they are creating patterns or illusions that price is going to do a certain thing. And then all of a sudden they do the opposite. And because they created that illusion, they uh, herded retail like sheep to place their stop loss at a specific area. And that cluster of stop losses becomes liquidity. All right. So if we take a look at this example right here, this is just the quick basics of advanced liquidity where price had bearish market structure shift. It returned back into resistance and it's struggling to break through the resistance, creating the illusion that it's bearish after the bearish market structure shift. Price is struggling to go through this resistance. Then we say liquidity is being engineered at the swing high above it, and that's buy side liquidity. So, what is liquidity? It is the stop orders of all of these traders put the swing or the stop loss at the swing high above the resistance after the bearish market structure shift. They place their trade something like that, and there's an accumulation of stop loss orders. You can see what happens as price takes the liquidity, big rejection down. You will see that happen lots of times. But the main takeaway for the first video is that in advanced liquidity, we look for high probability areas where there's stop losses pooled, because that is high probability buy side and sell side liquidity targets. And we can say that they are pooled there based on certain patterns in price that we know that retail traders will follow. So in the next episode, we will go a bit more in depth as to which swing highs and lows are the most important, and then we'll just continue building from there. See you guys in episode 2.